balance of payment. Okay, balance of payment is a record of transaction, economic transaction between two nations. Okay, between nations means you are considering the balance of payment of India, then we will record all the transactions of Indian economic entities like household, firms, government. Okay, these entities are entering into economic transaction with other foreign entities, foreign economic entities like foreign government, foreign household, foreign firms. Okay, so we are recording all the transaction between these two entities. Now, what kind of economic transaction we are recording in balance of payment? First of all, what kind of transactions? Can you think of any example of a transaction between two foreign nations? There is a foreign trade, imports and export of goods, import and exports of goods as well as services. There is a one-way flow of money like remittances. There is also investment abroad, foreigners investing in domestic economy, domestic investors investing in foreign economy, like foreigners buying shares, owning land. Okay, giving loans, these kind of transactions. All these transactions are recorded in balance of payment. This balance of payment is divided into two major components. First is current account and second is capital account. In current account, import, export of goods and services, which gives us trade balance. Suppose it is $100 billion, imports are $100 billion and exports are $120 billion, then trade balance is positive $20 billion. It could be deficit also. Then there is a trade in services, import and exports, imports and exports of services. Then remittances, foreign aid, all these transactions enter in current account. Now there are other kind of transactions which are enter in capital account. But what is the differentiating factor which led to this distinction, capital account and current account? Means why this division of transactions? Why some transactions are recorded in current account and why some transactions are recorded on capital account? See, there are certain transactions like our current account transactions, imports of goods and services, remittances, foreign aid, foreign income, some means income on foreign investment. That is, if that transaction is done, it has no implications for future. Okay, means there is no future flow of money caused by those transactions. On the other hand, there are certain transactions, say foreigners buying stock in domestic economy, like US citizens are buying stock, Indian stock, then that stock is that amount of transaction is enter in capital account. Since it is inflow, it will come with positive sign. Suppose foreigners purchase $10 billion worth of stock in Indian stock market, then that 10 billion will enter as a capital account entry. Okay, we have recorded these transactions in capital account. However, this transaction doesn't end here. This transaction has a future implication. What do I mean? What do I mean by future implications? Here, this transaction doesn't end here. This stock will give us income in future, like dividend. Stockholder get the dividend. That dividend is recorded as a income from foreign country, but this income is recorded in current account. Okay, so income from foreign investment, it could be land. If you own a land, obviously you will get the rent. If you own a stock, you will get the dividend, which is nothing but profit. If you own the entire factory in foreign country, then that entire factory's profit is your income. Okay, that will get recorded in current account. But act of buying a factory is a capital account entry. You have to record that transaction in capital account. This is the difference. Okay, the same way foreigners are investing in India, Indians are also investing in foreign countries. So that will be capital outflow. Suppose Indians, say Tata buys a factory in foreign country for $10 billion. Then it will enter as a negative $10 billion. Okay. So this way we will get our capital account balance. Okay. And this also includes loans. Okay. So if Indians have given loan to foreigners, then it will come as a negative because it is capital outflow. If foreigners are buying Indian government bonds or any Indian commercial bond like debentures, then it will be capital inflow. Okay. And we have to remember that there is a one accounting identity, that is current account plus capital account will always equal to 0. So suppose there is a current account surplus of $120 billion, then automatically there will be capital account deficit. I said surplus of $120 billion, na? So deficit of $120 billion. Okay.